Welcome to another S&P 500 analysis. Today is January 22nd, 2023. Happy New Year to all those that are celebrating the Lunar New Year. This is the year of the rabbit. Happy New Year. Are the bulls trying to hang on? In this video, we'll look at the price action of the indexes, the market sentiment, market internals, the 10-year yield, the US dollar, gold, silver, oil, and the ETF, SPY, QQQ, IWM, and finally, we'll take a look at the emini S&P 500 future, the ES. Stay tuned. Now, let's take a look at last week's performance of the indexes and the 11th sector in the S&P 500. Last week, we saw the Dow Jones Industrial is the weakest index. It lost 2.7%. And the strongest index were the technology, the composite, the NASDAQ composite and the NASDAQ 100, they both, gained over 0.5%. The NASDAQ 100 gained 0.67% and the NASDAQ composite gained 0.55%. And also looking at the 11th sector, you can see that the best performer last week was the communication sector. It gained 1.43%. Although the technology also performed quite well, the technology sector gained 0.65%, and also the energy gained 0.59%. Now, looking at the year-to-date, the year-to-date performer, the best performing index was the composite. The NASDAQ composite, the NASDAQ 100, and also the Russell 2000. And the best sector so far year to date is the communication. Once again, it gained over 10% year to date. The material also 6.5%, and also the technology 5.5%. And the worst performer is the consumer stable, and second to that is the utility, then followed by healthcare. So the defensive sector seems to be a little bit shaky starting out the year. Now, I'm just going to let you take a look at the rest of them individually by yourself. Just pause the video and then you could take a look at them individually. Now, let's move on and look at the S&P 500 weekly chart here. As you can see, the range for last week was a little bit almost 130 points. And it lost 26 points or 0.66%. And you can see that it is still in this one-time framing up, and it pointed a little bit of a hangman or a hammer candle, whatever you want to call it. But the key thing is it is testing this trend line, and it is still trying to break above this trend line here. And it did close above the 10-week and the 40-week moving average. And it is still remain in this lower high, lower low type of a downtrend pattern. So the key thing to watch is this pivot high here and then this pivot high. So we'll talk about that a little bit more detail when we take a look at the daily chart and of the S&P 500 and look at the price action there. Now, looking at the sentiment here on this chart, the sentiment, we see that the S&P 500 closed about 1.9% or 73 points. Or close to 74 points on Friday. You see that it's bumping back up close to this trend line here. Now, a lot of people is looking at this as a little bit of an evening star type of breakdown. But remember, we said that we are looking for the S&P 500 to come up at these levels here. And we're going to take a look at that later on when we get to that point in the video. But right now, you see that the VIX is back below the 20 level, and also the put-call ratio is still between the 1 and the 0.7 level. It is sitting at 0.8. So, market participants are getting less fearful, but also they are not getting FOMO yet. When it gets below 0.75, let's say it dipped down to 0.5, 0.6 on the put-call ratio, then we could see that the market participants are getting a little bit, FOMO and complacent. And that's when we need to be cautious. And here, looking at the up-down volume ratio, on Friday, we saw a 5.8 to 1 in favor of the upside. So it's relatively good. We'd like to see a little bit more stronger than that, but it's okay. Close to 6 is not too bad. And also the advanced decline, over 1,800 more advancing issue than declining issue. So again, that's indicate it's a broad market rally on Friday. And on the New York Stock Exchange, the new high, new low, the new high outnumbered the new low. 47 stock made new 52-week high versus 17 made new 52-week low. Like to see this a little bit higher on the 52-week high. But right now, the significant or the important thing is the number of new high outnumber a new low. Now looking at this advanced decline line here, this cumulative advanced decline on the New York Stock Exchange. Remember, we were talking about this positive divergence. But again, if we look at the short term, just on here, we also see a positive divergence here. So again, we're basically looking at the possibility having this taken out, or this, at least this pivot high get taken out to resolve this short-term positive divergence. So I wouldn't be surprised to see somewhere around here near the 4,100 level to get tested in the coming days or in the coming weeks. And here looking at the NASDAQ, the NASDAQ 100 on Friday closed almost 2.9% over 323 points. And also the up-down volume ratio quite strong, 6.8 to 1, almost 7 to 1 in favor of the upside. And also over 2,000 more advancing stock than declining stock. So definitely it was quite a strong rally for the NASDAQ market on Friday. And looking at the new high, new low in the NASDAQ market, it too also the new 52-week high outnumbered the new 52-week low by a margin of 59. There were 85 stock make new 52-week high versus 26 stock made new 52-week low. And here in the cumulative advanced decline line in the NASDAQ market, now we did see a little bit of a short-term negative divergence here. So that could signify that the technology sector might be a little bit overextended, especially also the communication sector. Remember when we look at those two, the sectors, the 11th sector in the S&P 500, those two sectors have been quite strong. So we expect a little bit of pullback maybe in the coming week with the large cap tech stock reporting that might pull back a little bit or put in a little bit of a jittery type of tone into the market. And we might see a little bit of a pullback on the technology stock, but we are still monitoring this potential positive divergence here. Now let's take a look at the S&P 500. As you can see on the S&P 500, it came down to this zone and got a nice bounce back up. For this coming week, the upper range of the expected moves is between 4,055 and 4,041. And the lower range is between 3,904 and 3,880. So what I'd be looking for the coming week is to break this trend line, get above this pivot high and into this upper range. And it might come up and test this pivot. Because remember, we saw that the cumulative advanced decline line is still showing a positive divergence. So we expect the S&P 500 to come up and resolve that positive divergence. Now, of course, it could pull back, and if it does pull back, then look for this 39 or 3,880 area again to get tested. And if it comes into this balance area, then we expect it to hold this balance area and then come back out. So that's basically what I'm looking for. Until that positive divergence get resolved, I'm still looking for more upside for the S&P 500. And looking at this NASDAQ 100 daily chart, we see that the NASDAQ 100 also got a nice bounce when it pulled back down near this 11,300 area and got a nice bounce back into this zone up above this 11,600. So for the coming week, the upper range is between 11,930 and 11,887. And the lower range is between 11,351 and 11,260. What I'm expecting to see next week is the continue to push up to this trend line Now, of course, we are seeing a little bit of a negative divergence on the short term. So I would not be surprised to see a little bit of a pullback before we push. Or remember, Tesla is going to report earnings this coming week. So that could be a little bit of a surprise there. And that could, pull the NASDAQ 100 down if Tesla get a negative reaction on its earning report. So, but on the upside, we're basically looking for this thing to come up to the upper range and work itself up to this 12,200 area, taking out this pivot high for that longer term positive divergence between the cumulative AD line and the NASDAQ 100. Now, of course, if it pull back, we could also look at this possibility of coming down to this area near the 11,000 level, basically coming down and retest this balance area. And here's the Russell 2000. We're looking at the Russell 2000 to continue to push up and retest this 1905 area and possibly get above this 1925 and possibly move up to this 1965. Now, if there's a pullback, then we are looking for, again, this testing of this trend line here. And if they're below this trend line, then we're looking at the possibility of coming back down to this 1780 area. Looking at the transportation, we see transportation spiked up last week here. So there's a little bit of a topping process here. Got to be careful. Although it did get a nice bounce off of near this trend line here and back above this zone, back above the 14,300 area. So we'll see, would it be able to come up and retest this pivot high here, or would it come back down and dip below the trend line here and move back down to this 13,700, 13,800 area and back test this level. And for the Dow Jones Industrial, we see that it broke down from this level here. It did get a nice bounce off of this 33,160 area, and it is holding a higher low. So we'll see, will it be able to get back above this pivot, this breakout level here at the 33,300 area and work itself back up to this zone here up above the 34,000. Now, remember last week, the industrial was the weakest performer. So we'll see, would it be able to regain some momentum in the coming week, or would it continue to break down? And if it does take out this low here, then I'd be looking at something down here near this 31,720 area. And that's where I would be keeping an eye on potential support. And the New York Stock Exchange Composite Index continued to show strength. You see that it did pull back and came down to this 15,600 zone and got a nice bounce back off of it. And right now, we're still looking for this thing to come up and possibly take out this 16,000 area and move higher. So we'll see how this index perform in the coming week, or would it pull back and test this area down here near this 15,240. Now let's take a look at the ETF for the S&P 500, the SPY. As you can see, last week it came down to this area here near the 386 and bounced off nicely. And right now it's appeared to be coming back up to this trend line and see would it be able to take out this trend line. Now, next week, this coming week, the expected move on the upper range is between 404 and 402.70, and the lower range is between 389 and 386.60. So my expectation on the upside is for it to continue to move up and break this trend line and into this upper range and possibly come up and take out this pivot high here near the 410 level, to resolve the positive divergence between the S&P 500 and the New York Stock Exchange cumulative AD line. Now, for the downside, if it comes down and look for this lower range between 389 and 386.60 and possibly back into this consolidation area here, this balance area that it came down and back tested last Thursday, and got a nice bounce off of it. Now, if it come back in, then we're essentially looking for this thing to come back down to somewhere around this 377 area. And for the QQQ, the ETF for the NASDAQ 100, we also saw a nice bounce off of this 275 area. Right now, I'm still looking for this thing to come up to this 284.59, this zone here, and possibly break this trend line and move up to this upper range of the expected move. And the upper range for this week is 290.60 and 289.30, and the lower range is between 276 and 274. So I'm still looking for the NASDAQ to come up and take out this near this 300 area between 295 and 300 area here on this pivot high to resolve that positive divergence for a longer term. Now, again, remember we did mention earlier about the short-term negative divergence between the cumulative AD line and the NASDAQ 100. So we could see a little bit of a pullback down to possibly near this 280 area before we take a push. But depends if the NASDAQ 100 push up along with the AD line. If the AD line takes out that negative divergence, then that could also resolve that short-term negative divergence, and we'd be just focusing on that positive divergence. And here's the Russell 2000 ETF IWM. See that it is trying to get back up to this 186, 187 area. And I'm looking for the Russell 2000 to come up to this upper range, which is between 189.84 and 189.10. And the lower range for this coming week is between 181 and 179.75. So looking on the upside is coming up to the upper range, and then on the downside, it's just coming down to this lower range, and we test this area here between 180 and 181. Now, looking at this market profile chart of the ES, the E-mini S&P 500, as you can see on Wednesday, we have all these single print, this poor structure right, on the way down. Remember on Wednesday, we have a sell-off. And then on Thursday, we have a balance day, basically a little bit of a chop zone on Thursday. And you see on Friday came up and filled these single prints. Right? We still got a little bit of a single print up here and also single print up here that need to be filled. In addition, it also left a lot of single print on Friday because the Friday was also a lot of poor structure, and it was a trend day up. So right now, we basically are looking for the possibility of filling these single prints next week up here, and then maybe we get a pullback and then fill these single print on the way down. Okay, so that's basically what I'm looking at, and here's the updated, chart of the S&P 500 ES, the future contract with the poor structure, all the single print level that I have labeled for the coming week. So you can see the single prints here, and then the point of control, I need to adjust that a little bit. The point of control is somewhere around 5150, and these are the single print. No pull high, pull low, so just a single print. That's basically we saw a pretty aggressive trend day on Friday. And on the candlestick chart for the ES, the E-mini S&P 500, as you can see, the price came down to this 3900 area and got a nice bounce back up and into this balance area, back into this balance area. So I'm expecting for the price to continue to move higher and into this zone and work itself back up to this upper edge of this balance area. Now, next week, the upper range is priced in for between 4,070 and 4,057 and a quarter. And the lower range is between 3,918 and 3/4 and 3,895. So we're definitely looking at this trend line here and see what be able to get up to this upper range and into the upper edge of this balance area here. Now, on the downside, if it come back down, then we expect it to dip back into this balance area here and chop around below the 3,900 level. Looking at the US dollar has continued to pull back, and we're watching this area here, this zone near the 101.29 or 101.30. See what it finds support and get a bounce back up. And if it doesn't, then the next area of potential support that I'm looking at is somewhere around 100.5. And on the 10-year yield, we see the 10-year yield has been bouncing around between this 3.5 and 3.4 area. So I expect it to continue to chop around in this area until the next FOMC meeting and the next Fed rate hike announcement. Then we'll see if the yield will move back up toward this trend line here and get up to this 3.6. So right now, I'm basically just watching this thing just status quo near this area between 3.4 and 3.5. And looking at crude oil, the crude oil still continue to come up, and I'm still looking for this thing to come up to this 84 area. And once you get above this 84, looking to move back up to the 90. And as you can see, remember last time we were talking about this potential inverted head and shoulder pattern, and we did a projected move, and that would bring it up to somewhere around 92 area on the 80% and 94 and 100% expected move. And for silver, silver has been consolidating inside of this range here between 23 and a quarter and 24 and a half. I expect it to break this consolidation range and move up. And with a 1x measure move here, we see that 100%, it will be somewhere around 25.70 and the 80% near 25 and a half. But I'm still looking for silver to come up and break this 26 area and get up to this 26 and a half zone. And gold also continue to move up. And right now I'm looking at this 1960 area, this zone up here for gold. If we see a little bit of a pullback, then we'll probably see it come back down and retest this zone between 1910 and 1920 area. As you can see, last week, the bear made an attempt to pull the S&P 500 down, but unable to hold it down. And on Friday, the bull seems to be buying it back up and took it back up near this trend line here. So definitely the bulls is still hanging on there. And without resolving that positive divergence, I think the bull is going to still make another attempt to push higher and take out this pivot high up at the 4,100 level. So for the coming week, unless some big negative surprise come out of Tesla and other company that's reporting earning, I expect the upside momentum to continue to carry to and possibly test this 4,100 level. So be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.